Welcome back to the Life Skills channel. Thanks for joining us today. We're going to be talking about taxes, how to understand a complex situation, how they affect you, and how we can minimize these to put some more money in your pocket. First thing we need to do is define a tax. So it is a compulsory contribution to a state or a federal organization, a government entity. It's things that we're obligated to as an American citizen, and it's important for us to understand these taxes, how much they are, so we can keep more of our money, put ourselves and our family in a better financial situation. The first few I would like to talk about are state taxes. We always have a choice where we want to live in life. So if you don't want to live in these states with the high taxes, you can always relocate, right? Let's talk about the 7 states that do not have personal income tax. Those are Wyoming, Washington, Texas, South Dakota, Nevada, Florida, and Alaska. The highest state income tax being California at 13.3%. The next tax that you need to be aware of living within those states is the sales tax. I'm going to share links below in the description. Great resources so you can understand the different rates on sales tax, property tax, and state income tax. That'll help you get a good idea of what state is right for you and your family. The state sales tax can vary pretty drastically. For example, Alabama has a 7.97% total sales tax, and it can go down to as low as, say, 5.5% in Maine. So it just depends on where you are, the local municipalities, and what they charge for living there. The next topic is property tax. Now, every state in the United States charges property taxes on real estate that you own within that state. However, some states do not charge property tax on vehicles. I'll leave a link, show you which ones do, which ones don't, and the highest property tax on real estate as well. The next topic we're going to talk about is federal income tax. That generally is the highest expense for us. We're going to try to simplify this, help give you a better understanding, and you can even calculate this so you know exactly what you're going to be liable for each year. Now, the different tax brackets for 2020, it ranges from 10 to 37%, depending on how much you earn that year. And it's a progressive system. So, for example, if you are in the 24% tax bracket, all of your income is not going to be taxed at that 24%. Let me explain. Hopefully, you'll have a better understanding of how this works. The example I'm going to use is on a $50,000 taxable income. So, how that would break down, you're going to pay 10% on the first $9,700. You're going to pay 12% on the chunk of income between $9,701 and $39,475. And then you're going to pay 22% on whatever's left over. So that's how it works. The IRS breaks your income into blocks of income, and they tax at that progressive rate system. If you know how much you're going to make that year, it's pretty easy to calculate your federal tax liability, even your state tax liability, if you know those figures. So the next 2 taxes we're going to talk about are the other side of your payroll taxes. They are FICA, also known as Social Security, along with Medicare. FICA tax is 6.2%, and your employer has to pay that as well, match it. Medicare is 1.45%, and your employer matches that as well. So you have a state income tax, if applicable, federal income tax, Medicare, and Social Security that's coming out of your check. Off the top, you don't even get any questions. That's why, if you can live in one of those states that does not charge you a state income tax, it could just save you a lot of money. Anywhere from 6 to 13.3%. Moving along, we're going to talk about some deductions and exemptions. Some of you may qualify for the Earned Income Credit for taxpayers who have three or more qualifying children. The standard deduction has changed within the past few years. Currently, it's at $12,400 for a single individual, and it doubles for a married couple. What that means is that is just income that you're not going to pay tax on. It takes your gross income, reduces it by that amount, and now that is the balance that you are liable for taxes on. One interesting thing most people aren't familiar with is the foreign earned income exclusion, something I've utilized many times in the past. It allows you to exclude up to $107,600 if you qualify and you work outside the United States for a minimum of a 12-month period. So there's days and times that you can use to qualify for this exemption, and it can save you a lot of money. I'm going to leave you a link to the IRS website. It's going to tell you all about it. If you're interested in living outside of the United States, it's a great tool, great resource, and it'll save you a lot of money on taxes. Put more of that in your pocket. So you can work outside the U.S., change states. Those two good resources to save yourself some money. The last one we're going to talk about is opening a business. As an employee, you're very limited to your deductions, right? So you earn money from your employer. You get the taxes taken out automatically. Right off the top, you got state income, federal income tax, Medicare, and Social Security pulled right out. They don't trust you. They're going to go ahead and take that off the top. It's government mandated for them to do so. Now, as a business owner, you bring in revenue, you spend that on business expenses. Obviously, they have to be qualified. Let's talk about a few of those. One being work-related travel expenses, work-related car use, home office, business insurance, phone and internet expenses, office supplies, bank fees, depreciation on business assets. So there's so many things that you can write off as business expenses. Then you pay tax on what's left over. So as you can see, that can save you a lot of money because you're paying tax on what's left over after you spent money back into the business versus them taking the money off the top. You know, you getting to keep what's left over. So hopefully we've simplified this subject. We have just scratched the surface, hopefully shed some light on the basics of your income taxes and sales and property taxes. The next video, we're going to go more in depth on investment taxes such as your 401k and things. So stay tuned. If you got any questions, be sure to leave a comment below. Thanks for joining us. We'll see you soon.